Hello students and welcome to the lecture. So students, as we know that we are covering the types of banks. Okay. And we had covered the four types of banks so far. The first bank we had covered was the commercial banks. Okay. Second banks we had covered were the cooperative banks. Third bank which we had covered were the regional rural banks. Okay. And the fourth one was the payment banks. Okay. And right now we are discussing over the small finance banks. We have discussed in detail the various provisions related with the topic of the small finance banks, and we have discussed them in detail. I hope that you have revised them well so that you will be able to grasp the topic completely and effectively. Got it? So basically in this lecture, we are going to continue with the same topic, but we will look on the other facts and figures also. All right. Till then, just let us a little bit reminder of the topics we had covered. The establishment of the small finance banks was in the 2015 by issuing the guidelines for licensing of the SFBs in the private sector. Okay. These were the guidelines which were issued by the Reserve Bank of India to introduce the SFBs formally. Got it? SFBs works under the BRA 1949 and that's why they comes under the Reserve Bank of India. Okay. So right now in this topic, we are going to start with a priority sector lending, PSL. Like what is a PSL? Okay. Priority sector lending by introduction is a regulatory requirement imposed by the Reserve Bank of India on banks, including the small finance banks, to ensure that a portion of their loan portfolios is directed towards specific sectors of economy that are considered priorities for socio-economic development. Okay, so we can say that the PSL or the priority sector lending is a specialized regulatory requirement. First condition. Second is it was implemented and revised by the RBI on the banks. Why? Because RBI is a regulatory authority. Okay. Third condition is that almost every bank has to maintain or obey to the regulatory guidelines issued by the RBI regarding PSL. And the third point is that it was PSL. Okay. Third point is that it is important for which? Important for socio-economic development. Alright. So these are the simple points regarding the PSL. You can write them down. The first is these are the specialized regulatory requirement for some specific purpose like the socio-economic development. Thereafter, second one was the implemented and revised by the Reserve Bank of India on the banks, because the RBI is having the control of the banks in this economy. So that's why RBI is responsible for the implementation and the continuation of the PSL by the banks. Third one is that almost every bank has to maintain or obey to the regulatory guidelines issued by the Reserve Bank of India regarding the PSL. Okay. Fourth point is that it is important for socio-economic development of the regions. Okay. So this is the paragraph and this is the breakage of the paragraph. Got it? All right. So now let's move forward. So basically, PSL is having some categories. All right. And these categories are those categories which are important for the socio-economic development, but are generally not preferred by the banks. Okay, so we can say they are important for the socio-economic development, but they are generally not preferred by the banks to be granted as a loan. Now you can ask me, sir, if these are very, very important for the socio-economic development, then why the banks are not preferring them? Means it makes no sense, right? Yes, it may no sense, but let me give an example so that it could start make a sense for you. This is the bank. They have the limited resources in terms of granting the loans, and their target was maximum profit. Okay, it means they would try to grant the loan to the person who could offer them maximum return. Maximum return. All right. So that's why the banks are always preferred to grant the loans who could give them more interest or more returns. And that's the reason by still having the socio-economic importance by the PSL sectors, the banks generally do not prefer them to grant a loan, because these sectors are generally not offer the lucrative returns to the banks. So that's why the banks are generally not so interested in them, except the public sector banks, because the public sector banks are being controlled by the government. Okay, so that's why they have to do the more PSL lendings than the other banks. All right, but in case of the private banks or the private traditional banks, these banks generally do not prefer to grant the loans to the PSL. Okay, however, under the regulations and the strict guidelines from the Reserve Bank of India, they are granting the loans to them, but not as a preferred ones. Okay, so remember this thing. Reason I have told you. All right. Thereafter, now if we try to figure out the categories, which we call as a what categories? As a PSL categories. Like which categories comes under the priority sector lending segment. The first is the agriculture. Loans provided to the farmers, agriculture activities and allied sectors, including the crop loans, livestock and the farm mechanization, is a part of PSL. Okay. And by seeing these people, you could easily assume that they are not able to provide the lucrative returns to the banks. Okay. That's why this sector has to be involved in the PSL so that they could take the loan from the bank. Second sector is the small and the micro enterprises. About this, I had given you example in the previous lecture. If there was a large enterprise which is offering 20% interest rate, and there is MSME which is only offering 13% interest rate. Okay, so for the bank, this one is in the +7 one and this one is in the -7. Okay, so generally the bank will give the preference to the large one. All right, that's why the SMEs are also included in the PSL categories. Okay, Credit extended to the small and micro enterprises for their business needs, including working capital and term loans, are the part of PSL categories. Okay. Thereafter, the housing loans. Loans for the construction, purchase and repair of houses for economical weaker sections and low income groups. Okay. Remember these things. Housing loans for high income groups and middle income groups are not the part of PSL. Remember this thing. Okay. Generally, housing loans which are giving to the economical weaker sections and the low income groups are considered under the part of the PSL. Okay. So if the question comes that the housing loans are a part of PSL category, it might be right. But if the question comes with the two options, like which one of the following is the right? Housing loans are the part of PSL categories. Second one is housing loan for the EWS and the LIG are the part of the PSL categories. So in such a case, section 2, or you can say option 2 will be the right one. Because as I have told you, housing loan for EWS and the LIG are considered as a PSL category. Okay. Thereafter, loan for the education. Okay. It is also considered as the subsidized loans. Okay. For example, suppose if there are two people, both are taking the loan from the bank called XYZ. This person is taking loan rupees 4 lakh. This person is also taking loans of rupees 4 lakh. Got it? This person has to bear 12% interest rate. This person has to bear only 6% interest rate. Now you will ask me, so why there is a difference between the interest rate? If they are borrowing the same amount, the bank is same, then why? Because this person is borrowing for general purpose. This person is borrowing for education. Okay. And there might be a situation that there will be no interest at all. Alright. So in such a scenario, this will called a subsidized loan. What we will call it? Subsidized loan. Okay. Because the interest rate is lower than the general interest rate. And second, there might be no interest at all. Because the interest will not have to pay by the person who had taken the loan, but the interest will be paid by the government on behalf of it. Okay. So that's why these are also known as the subsidized loan. Okay. So you can say because of the lower interest rates, the banks will generally not prefer the subsidized loans or the education loan. But we know that the education is very, very important for the social development and as well as for the economic development. That's why the education is also included under the category of PSL. Got it? Thereafter, the export credit. Okay. Now, financing for the export-oriented businesses to promote international trade is a PSL category. For example, there is a bank XYZ. Two people is asking for the loan. One people is asking rupees 4 lakh. Second people is also asking for rupees 4 lakh. Okay. This people is offering 12%. This people is offering only 10%. Even though the interest rate is low, but that fellow is taking the loan for the exports or to finance the export, which will bring the foreign currency in the country. In such a case, the Reserve Bank of India will direct the XYZ to grant the loan to this person. Got it? So, export oriented loan taking is also considered as a part of the PSL. All right. Thereafter, the loans to the weaker sections, loans to individuals and groups belonging to weaker or economical sections, such as scheduled castes, scheduled tribes, and the minorities. Okay, because these peoples are generally belong to the low income groups. All right, or even in the economic weaker sections groups. Second, or one. All right. So these people are not able to take the loan from the banks at a higher interest rate, right? This is the acceptable fact. That's why it is the responsibility that we should ensure their upliftment in a economical terms. Like we should allow them to take the loan for their businesses, for their houses, for their education. And once the economical upliftment of them will be done, thereafter their social upliftment will be also done. Okay, that's why they are also considered under the PSL category. Got it? All right, now let's move forward. Thereafter, the renewable energy. Okay, like if you are following the current affairs, if you are watching the news in the regular basis, then there are two types of resources are being discussed in the news channels. The first is the non-renewable, second one is the renewable. Okay, non-renewable resources are those which are limited in quantity and couldn't be regenerated easily. Okay, renewable resources are those resources which are not limited in quantity and could be regenerated easily. Okay, so non-renewable resources could be the fossil fuels, could be the other resources like water and all, but renewable resources could be the solar power, okay, wind energy, all right, and even the hydropowers. These are the renewable resources. It means that they are not limited in numbers and they could be regenerated easily. Okay, so that's why the major economies of the world nowadays are trying to shift it themselves from non-renewable to renewable. Why? Because one day non-renewable resources will be completed. Okay, and if we are not able to shift it ourselves on the renewable resources, then we will not be able to cope up with the situation. It is the first case. Second case is generally the rule of demand and supply. Demand and supply. Okay, non-renewable resources are basically used for the energy generation, and that's why they having the high demand. Okay, because they having the high demand and their supply is low because they are limited in quantity, that's why their prices are much higher. Prices are much higher. Okay, and that's why the economies have to spend their major portion to buying these particular resources. All right, that's why we are trying to shift it ourselves from the non-renewable to the renewable. Okay, so if some project, suppose this is the XYZ bank, okay, it's got the two projects, project A and the project B. The project A is capable to bear the 2% interest rate. Project B is only capable to bear the 6% interest rate. Okay. So generally, the XYZ will prefer project A. Okay. But under the PSL, the XYZ will have to grant the loan to the B, which will be promoting the renewable resources. Okay. So that's why renewable resources are the part of the PSL categories. Got it? Thereafter, other PL activities. RBI may include additional activities or sectors as a part of the PSL requirements because RBI is a regulatory authority in banking and PSL as well. Alright, that's why the RBI has the sole authority. It's not sole, basically, you can say. Basically, the RBI has the authority to include the additional activities or sector as a part of PSL requirements. Got it? Thereafter, we have the PSL target and widths, like how the Reserve Bank of India decided that the PSL target should be done. Like I had told you, suppose this is the bank, we called it XYZ. Okay, this bank having rupees 60 lakhs after deducting CRR and the SLR. Okay, so as we had discussed, the RBI could ask the XYZ to grant at least 2%, 10%. This is the range. I'm just telling you. Okay, as a priority sector, or we can say to grant as at least 10% into the priority sector. It means that out of 60 lakhs, 10% will be 6 lakhs. Okay, so the 6 lakhs should be granted only for the PSL. Okay, so how will be the RBI deciding this thing? This thing is important. Okay, so RBI sets an overall target for the banks for PSL lending expressed as a percentage of their adjusted net bank credit or the credit equivalent amount of off-balance sheet exposure, COBSE. What do you mean by these two terms? Let's understand. So the first term is the A and BC, known as the adjusted net bank credit. Got it? So what do you mean by it? Basically, it is the sum of total amount lent out by the bank in form of loans or investments. Okay, so the adjusted net bank credit or the ANBSP is the sum of total amount lent out by the banks in form of loans or the investment. For example, suppose this is the loan sheet of a bank. 1, 2, 3 and 4. They had provided the loan to XYZ Limited. Thereafter, they had provided the loan to the individual. They had provided the loan to the small company. Okay. Thereafter, they had provided the loan to the individual. And if we go with the amount, the XYZ got rupees 10 lakh. This individual got rupees 1 lakh. Small business got rupees 20 lakhs. Okay. This individual again got rupees 1 lakh or 2 lakh, you can say. Alright. So if we try to find out the total amount, so 2 and 1, 3 and this 30. So total 33 lakhs rupees has been granted out by the bank as a loan. So in such a scenario, as per the definition, sum of total amount lent out by the bank in form of loans. So A and BC will be the 33 lakhs. will be the A and BC. Okay. Second one was the credit equivalent amount of off-balance sheet and exposure, COBC. Okay. So it is the form of assets and liabilities. Assets and liabilities which are not shown on balance sheet. Okay. For example, suppose this is the balance sheet. There are the assets, there are the liabilities. Okay. So the assets total are of 10 lakh rupees. And the liabilities are total of rupees 5 lakhs. This are those assets and liabilities which are showing on the bank's balance sheet. But suppose instead of this, the bank also having the assets of rupees 2 lakhs and the liability of rupees 1 lakh. Okay, which is not shown on the balance sheet but present in the off record. So these will be the part of the COBSE. Okay. So basically, while deciding the PSL targets, the RBI considered the both adjusted net bank credit or the credit equivalent amount of balance sheet exposure. Okay. Whichever is higher will be the taken as a base. Suppose if A and BC is 2 and the COBC is only 1. In such a scenario, A and BC will be taken as a base because it is the higher category. Alright. SFBs are required to achieve these targets and sub-target for specific categories of the priority sectors as defined by the Reserve Bank of India. Okay. For instance, there are sub-targets for agriculture and weaker sections within the overall PSL target. It means that whatever the target has been set by the RBI, these banks has to accept them. Okay. Achieving these targets essential for the SFBs to maintain regulatory compliance. Means if the SFB is not achieving the target, it means that the Reserve Bank of India will take this as a violation of the regulation and can interfere. Okay. Impact on the inclusive growth. The PSL framework designed to promote the financial inclusion. It means that we should include the sectors which are important for the socio-economic development but are generally not preferred by the traditional banks. Okay. Thereafter, by focusing on the priority sector lendings, SFBs contribute to the development of critical sectors, rural areas, undeserved population. This in turn help reduce income disparities and foster income growth at the grassroots levels. SFBs required to monitor their PSL lendings and report their progress regularly to the Reserve Bank of India through the audit and inspections. Non-compliance with the PSL targets can result penalties, regulatory actions. Bank must maintain a strong focus on the meeting these obligations, as we had discussed already. Okay. Thereafter, the PSL certificates. PSL certificates are mechanism used by banks, including the SFBs in India, to meet their PSL targets and obligations more effectively. Let's try to find it out. Banks in India, including the SFBs, are mandated by the Reserve Bank of India to lend a specific percentage of their ANBC or COBSE as a PSL, whichever is higher. Okay. These priority sectors include agriculture, small and weaker section, housing, as we had discussed. Okay. Each bank is assigned an overall PSL target and sub-targets for the specific categories within the priority sectors. That's what we had discussed. Exceeding PSL target. It means that some banks which has exceed their PSL targets in certain category due to their business focus. It means that the PSL target was only 20%, but the target achieved was 30%. It means that 10% is the exceeding limit. Okay. So in such a case, the exceeding PSL targets can result from a bank's commitment to the financial inclusion and lending practices in the targeted sectors. Okay. They have a strong compliances on the financial inclusion and outreach to underserved population. They set up branches and banking outlets in rural and the semi-urban areas, bringing banking services to closer to the people, because they are focusing on these people who are not preferred, undeserved or marginalized segment of the population. Alright. Through their microfinance and the small business lending activities, SFBs provided credit to those who may not have access to the traditional bankings. Alright. Thereafter, compliance and the monitoring. SFB is subject to the rigorous monitoring and supervision by the RBI to ensure compliance with regulatory guidelines, including capital adequacy, norms, asset quality, and the governance standards by the 2015 guidelines. Alright. They must adhere to anti-money laundering and know your customer norms like the payment banks to prevent financial irregularities and safeguard customer interest. Impact on the economic developments by the SFBs. SFBs have a positive impact on economic development by promoting financial inclusion, supporting MSMEs, and facilitating access to credit in undeserved regions. Play a crucial role reducing the reliance on informal and unregulated financial channels. Okay, so in conclusion, we can say small finance banks have emerged as important institutions in India's financial landscape, contributing significantly to financial inclusion and providing banking services to small and marginalized customers. Focus on priority sector lendings and outreach to undeserved areas, essential for the inclusive economic growth and development. Okay, so students, in this lecture, we have done with the small financial banks. All right. In the next lecture, we will start with the foreign banks, the another category. Till then, just revise the facts and figures we have discussed in this lecture and be ready for the another lecture. With this note, let's end this lecture and thank you.